Hello there, my friends. Chris Marcus here with you on Thursday, September 21st. Good news. Today we have another Andrew Maguire video. For many of you who are familiar, Andrew Maguire has been an interesting figure in the gold and silver debate over the past couple of years. I continue to believe that he has some more access to a lot of the trading order flow than most of us get to see. I balance that with the fact that Andrew said several times this year that he sees an order coming in that could possibly break the manipulation finally and lead to some sort of gold and silver price reset at presumably much higher levels, which that all sounds plausible, just being open and forthright that he has put some dates on it this year which have come and gone. And so far, not much has happened in the metals. Well, I guess maybe that's not true. They got smoked again this week, trading down pretty much all week. You had the Fed announcement, where shockingly enough, again, the Fed said nothing yesterday. Supposedly going to unwind their balance sheet, maybe raise interest rates again this year. So one of the things that was interesting, before we get back to Andrew, on the Fed meeting yesterday, I read in one place where it said something like they were thinking maybe one rate hike this year, 2 or 3 next year, 2 in 2019, and then down to 1 in 2020, which I thought that was bizarre. I wouldn't really put too much stock into it because these guys change their mind, based on the latest data anyway. So, you have a bad jobs report come out, well, maybe we won't raise interest rates. So the idea that the Fed really has any sort of accurate handle on what they're doing 2 or 3 years from now, I personally don't buy that one. Although still, just let's take it at face value for a second. So hike this year, let's say it was 3 next year, 2. So that's 6 over the next 2.5 years, which would bring rates to about 2.5%. And then somehow they would be slowing down. When is the normalization of interest rates coming? So they're saying by 2020, we're still going to have interest rates under 3% in response to a crisis that's, by that point, would be over a decade old. So, again, as usual, I think it's interesting to take note of the Fed and what they're saying, also take it with a grain of salt, and perhaps focus more on the fact that, well, if they ever really did raise interest rates, who's going to buy the bonds? How is all this debt that's based on low interest rates going to remain solvent? I've yet to find, I've been searching for about 10 years, I've yet to find anyone who knows the answer to that. Personally, I don't believe there really is an exit plan, or maybe they think there is and they just don't quite understand the impact. But again, you can notice that when problems began to occur leading up to the last housing bubble was when, following the low interest rates, Greenspan raises interest rates, I might add months after telling people to take out adjustable rate mortgages, and of course a lot of those went bad. So quick thoughts on the Fed yesterday, and now back to Andrew. Of course, the two are tied together. I think in any rational world, you would have already seen gold and silver a lot higher. We talk about the manipulation and how, because it's traded in paper, you can sell as much gold or silver as you want. Yet, whenever we reach that point where someone has to actually deliver it, I think we will see the short squeeze of all ages and higher gold and silver prices that would leave most people stunned. And perhaps, again, I know there's in the community a lot of frustration because Andrew, who a lot of people look to, and let me put it this way, as someone who's traded professionally, worked in a couple of different finance shops, when I hear Andrew speak, it's clearly someone who's not just sitting in his boxers reading the internet, who has some experience, who's been there involved in some interesting situations. So my feel, he doesn't strike me as someone who's just going out and making stuff up either. So my view is that perhaps he was a little presumptuous or aggressive on the timing of when some of these moves would happen, as opposed to trying to misinform people, which I understand is something to watch out for, because there are some folks in the gold and silver community that I do believe are putting out misinformation that will work out a lot better for the banks than us. I don't find Andrew to be one of them. Again, it's up for everybody to make their own decisions. I can only share my thoughts and at least why I come to these conclusions. So there's the 5-minute in disclaimer. Now to get into what Andrew actually said. It was fascinating because if you look past all that and everything we just said in the disclaimers, and if you can just, whatever you believe, just hear what he's saying and just take it at face value for what it is. Some really interesting comments in this interview he did on King World News last week, because the main crux of what he was saying is that Goldman Sachs had previously been short gold and silver, and now they're going long, which means basically they would have benefited before if prices were lower. And now if they're getting long and own gold and silver, would benefit from prices being higher. And it was interesting. Again, I do my best in these videos. Certainly there's enough negative stuff out there, and I get it. I also like to bring a positive perspective to some of these and focus as much on what we can do. So my goal isn't to be name calling, although just in the matter of being completely forthright and honest, Goldman Sachs, amongst many in the financial community, doesn't have the greatest reputation. I mean, they have a track record of looking out for their own interests before the interests of their clients. You may remember following the housing bubble when they were brought in front of Congress, and I forget that congressman's name, although he kept talking about the shitty deal that Goldman sold to their customers. And what Andrew was mentioning about is how Goldman usually doesn't comment on something unless they're talking up their book. Translation, they'll say, do this when it's going to push the price in Goldman's favor. Again, I'm sharing, this is my opinion. I believe actually a lot of this could be easily documented as well. But in the interest of staying out of a courtroom, so we can keep making Arcadia videos, I will say these are, I do agree. And in my experience, I've found that to be accurate. Again, that's just my opinion. Although it was interesting because if you've seen the movie The Big Short, there's that scene in the end where the character's real life person, Dr. Michael Burry, basically had gotten the trade right. He knew that the housing market was going to have problems, yet, again, it's not like a stock market where there's a clear value. These bonds were being priced by the person he was trading against, which was Goldman. And at the end of the movie, finally, the guy from Goldman calls him and says, Dr. Burry, we were looking at your marks and we revised them, to which he has this great line saying, I think what you meant to say was that now that you've established your own significant short position, you're finally ready to mark my trade correctly. And the Goldman guy, just sits there stunned and kind of speechless. Whether that's the way the actual conversation went down, in my experience, again, I've found that to be symptomatic of my experience and knowledge of Goldman Sachs. So interesting to hear that Andrew is seeing this. Now, there was a Goldman guy named Jeff Curry, and one of the things he even mentioned was warning people about paper gold and the ETF gold like GLD, which was when Andrew made that point about Goldman talks their own book. So, trying to balance here. I think my camera's a little tilted there, so hopefully you can bear with me. anyway, take that for what you will. Again, a lot of people believe, myself included, that J.P. Morgan has amassed a large pile of physical silver, which certainly, if it is the case, lends more credence to the argument that the banks that are believed to be manipulating the market now would benefit from the price going higher. The thinking amongst many in the gold and silver communities, hopefully that means we're close to some sort of resolution and things will be marked correctly. So at least the belief, again, Goldman and JP Morgan don't often necessarily go out and tell you exactly what their position is, and if they do, whether you take that at face value or not, be careful. Yet there's a belief, let's say, that Goldman and JP Morgan now long gold. Also in the interview, in case you've never heard this before, he referred to Goldman Sachs as the vampire squid, is a nickname that they've received over the past couple of years, mainly because of the stuff that they seem to get involved in time and time again. So, again, just interesting. And if you hadn't heard it, just now you know that there is a nickname for Goldman Sachs. And let's see. So just a couple more notes here. Again, the main crux being that Andrew's saying Goldman is going long. And again, he did warn. Yes, in the warning about paper gold, it's interesting that Jeff Curry, the Goldman Sachs guy, in this part you can Google and see his comments, warned about GLD. Again, I have mixed thoughts. My general school of thought is if you can own the physical metal and have it stored somewhere safely, I would opt for that over GLD and SLV, which are basically ETFs, with the premise being that, there's supposed to be metal stored there, so whatever happens to the price of metal, if you're invested in GLD or SLV, which is the silver one, would react accordingly. The question, though, is the actual metal that's supposed to be stored in GLD and SLV actually there? I really couldn't tell you for sure, although I'll put it like this. There are people that I follow, trust, and put stock in that really dig through the metal inflows and outflows. Ted Butler is one of them, so if you really want more information on that, Butler Research is a good resource. Ted doesn't really feel like he trusts them too much, and I hear a lot of stuff where makes me hesitant. Again, it could be there, but maybe the advantage of those ETFs is if you're trading actively, it can be beneficial because the commissions are going to be smaller. Certainly if you're buying physical gold and silver, it's the commissions on and actually getting things shipped don't make it so conducive to buying it this week, selling it next week. Again, trying to time all these short-term moves in gold and silver. By all means, I would say if you can do that successfully, please call me. I'd love to meet you. Tricky thing to do, which is why if you look at something from a long-term perspective and can kind of see where things almost have to go, to me seems like a better option, especially if you're just regular human that saving money isn't, a finance guru, but just want to keep your savings somewhere safe and actually win when a lot of these bubbles begin collapsing. So in general, I would avoid those ETFs. Now you even have Goldman Sachs warning about it. So maybe it was just on his mind. Maybe who knows what they're up to. I couldn't even begin to imagine. But last point Andrew mentioned here is that according to what he's seeing, again, there's a bit of a floor on the metals because according to Andrew, there are large buyers, whether that's foreign central banks or large sovereign funds that are sitting there, and every time the price gets smashed, they want physical metal. If that is indeed the case, certainly if you're waiting for gold and silver to go up, that would be good news because Again, my best guess of how this all eventually ends is when enough people come and say, I want my medal, and you get to that last bar where it's not there, then all these guys who are short medal have to go buy it back, and by the time they are able to find someone to sell it to them, I think we're looking at an exponentially higher price for both gold and silver. So hopefully those sideline buyers that Andrew's talking about are there. Certainly it didn't seem like they were there the last couple days. And again, I don't think anybody really knows, at least in the gold and silver community. Maybe there's some high-level bankers or the Rothschilds know when they're going to pull the plug on all the stuff they've been orchestrating. Fortunately, they haven't told me that yet. But that's why you should hit the subscribe button, because as soon as we do see some signs that something's imminent, I will be watching and covering it and sharing that with you so you can understand what's going on. And with that said, again, hit the subscribe button. Hope you found this helpful. Leave any comments below, and we will see you again tomorrow. Thanks.